There's something strange happening right now. And if you feel like something isn't adding up, it's not paranoia, it's not pessimism, and it's not a lack of information. It's just your brain noticing that someone important is acting very differently from the official narrative. Because while everyone keeps repeating that inflation is under control, that markets are optimistic, and that the economy is adjusting, gold keeps rising day after day, week after week, as if it were reacting to a fire that hasn't made the news yet. And then comes a question that really bothers people. Why is the asset that supposedly only goes up when everything goes wrong hitting all-time highs?
Exactly.
When stocks are celebrating and the general mood is everything's fine. That makes no sense to anyone who learned the basics of investing. Either gold is wrong or we are. Now think about this calmly with me. Have you ever noticed how having a little bit of money saved can feel more stressful than having nothing at all? When you have nothing, fear has already become routine. But when you manage to save some amount, small and hard-earned, every expense feels like a threat. Every unexpected event becomes a risk of going back to zero. That anxiety isn't rational, it's emotional. And what's happening with gold is exactly that, just on a global scale. The world saved up some money in the bank over decades, built a system based on trust, stability, and predictability. And now that trust has started to crack. Not that everything is broken. Not yet. But when doubt shows up, no one waits for the ceiling to collapse before looking for an exit. What's most curious is that this didn't start with a collapse, a massive crisis, or a catastrophic event. It started with small signals, discrete purchases, silent adjustments, decisions that don't make headlines. Central banks that, out of nowhere, started buying more gold in a single quarter than they had bought in entire decades. Countries that always trusted the current system but are now acting like someone who sleeps with one eye open. And this isn't about thinking the world will end tomorrow. It's about not fully trusting that the rules will stay the same over the next 10 or 20 years. Here's the part almost no one understands. Gold doesn't react to the present. It reacts to the future imagined by the biggest players in the world. People and institutions that aren't thinking about the next quarter, but about the next historical cycle. While the average investor looks at the monthly chart, these institutions are looking at the entire structure of the game. And when they start acting in similar ways without coordinating with each other, it's because incentives have changed. It's not a conspiracy. It's rational survival. For more than 80 years, the world worked like a game of musical chairs where only one chair mattered. The dollar. Everyone wanted to sit in it, to trade, to hold reserves, to buy energy, to maintain stability. As long as everyone believed that a chair would never be pulled away, the game worked fine. But the problem with musical chairs isn't when the music stops. It's the moment someone starts suspecting there might not be enough chairs for everyone. When that happens, the tension shifts. People don't wait for the music to stop. They start looking for another chair ahead of time. And there is one chair that no one can pull away, one that doesn't depend on promises, agreements, or political trust. That chair is physical gold, not because it's perfect, modern, or highly profitable, but because it doesn't depend on anyone keeping their word. It simply exists. And when the world starts doubting promises, this kind of asset becomes desirable again, not out of greed, but out of fear of having no options. Now think about the psychological impact of an event that went almost unnoticed by the general public, but completely changed the mindset of those who actually control the money. When a country's entire international reserves can be frozen overnight, regardless of the reason, the message is clear. If it's possible, then it's a risk. And if it's a risk, it needs to be managed. It doesn't matter if you think it will never happen to you. The mere fact that it can happen changes the game. That's where things get serious, because the countries buying gold aggressively are not isolated from the system. They are deeply integrated into it. Countries that grew, prospered, and benefited from the current model. And even so, they are quietly reducing exposure, little by little, without making noise. They're not shouting that something will go wrong. They're simply protecting themselves in case it does. Meanwhile, the average investor looks at the stock market going up, sees optimistic headlines, hears promises of growth, and feels that internal pressure of falling behind if they don't join the party. That creates mental confusion, because how can everything go up at the same time? How can the asset of fear and the asset of euphoria move together? The answer is simple, but uncomfortable. There are two worlds operating at the same time. One short-term, full of positive narratives, and another long-term, silent, defensive, and cautious. It's like someone posting smiling vacation photos while quietly organizing important documents, making backup plans, and stocking supplies. To an outsider, it looks contradictory. To the person living it, it's just prudence. And gold is reacting exactly to that second behavior, not to what's being said, but to what's being done. The most dangerous thing here isn't gold going up. It's the fact that this is happening without panic, without alarming headlines, without desperation. It's a calm, persistent, almost boring movement. And when important things happen in a boring way, it's because those acting don't want attention. Because they know that if everyone notices at the same time, the game changes too fast. And maybe the most ironic part of all this is realizing that while the system looks stable on the outside, it's being adjusted on the inside. Not for tomorrow, but for a future no one wants to announce out loud. A future where trust is no longer absolute, just conditional. And when trust stops being absolute, money starts looking for shelter, not yield. Shelter. This doesn't mean the world will collapse. It doesn't mean the dollar will disappear. It doesn't mean you need to panic. But it does mean that those with a lot to lose are no longer betting all their chips on a single scenario. And when those with a lot to lose start acting like that, the small investor at least needs to understand why. Because ignoring structural changes has always been more expensive than getting the timing wrong. Gold isn't going up because something went wrong today. It's going up because the biggest players in the world aren't sure everything will keep going right tomorrow. And that difference in perception between a comfortable now and an uncertain later is exactly where the biggest silent movements in financial history are born. Now let me put you inside the head of the people actually making these decisions, because this is where everything really starts to make sense. Imagine you're responsible for an entire country's money. It's not your money. It's not just one client's money. It's the reserve that supports imports, public salaries, currency stability, and international confidence. You can't mess up badly. You can't gamble. You can't act on emotion. Your job isn't to make more money. It's to make sure the country keeps functioning even if the world changes. For decades, that decision was almost automatic. Most of the money stayed in dollar-linked assets because it worked. It was predictable. It was accepted by everyone. It was safe. But safety isn't fixed. Safety is a perception. And perceptions change when concrete examples appear. When you see that rules that once seemed sacred can be reinterpreted depending on the political moment, the word safe starts to lose strength. Not all at once, but gradually, and that's exactly how structural changes happen. Not with a button being pushed, but with small decisions repeated over a long time. No one wakes up and decides to abandon an entire system overnight. What happens is much quieter. You reduce a little here, offset there, diversify more over there. Not because you're sure something bad will happen, but because the cost of not preparing has become too high. Now notice how similar this is to the financial life of someone watching this video. Most people aren't broke because they made one absurd decision. They're exhausted because they're constantly putting out fires, because they depend on a system that works as long as everything goes right, but collapses at the first unexpected event. Because they feel like they're always one step away from falling back. And that constant sense of instability creates enormous mental wear. Money stops being a tool and becomes a source of anxiety. The biggest players in the world are trying to avoid exactly that. They don't want to depend on a single system, a single promise, a single rule. They want options. They want room to maneuver. They want time to react if something changes. And gold, whether you like it or not, is one of those options. Not because it will save the world, but because it doesn't break at the same time as everything else. And here's a point almost no one mentions. The gold market is small, ridiculously small compared to the size of global money. When an individual buys a little gold, it's irrelevant for price. But when dozens of central banks decide continuously to increase this asset's share in their reserves, even by a few percentage points, the impact is huge. Not because they want to speculate, but because supply isn't infinite. Gold isn't like stocks, which can issue more. It isn't like currency, which can be created. It's extracted with increasing difficulty. Every year it gets more expensive, more complex, and slower to pull gold out of the ground. At the same time, structural demand is increasing, not because of fashion, because of distrust. And when rigid supply meets persistent demand, the price goes up. Not from euphoria, but from constant pressure. That helps explain why gold rises without dramatic corrections, without explosions followed by collapses. It's a boring movement. Linear, uncomfortable. It goes up because someone is buying every month, not because someone is betting everything. It's exactly the kind of movement that goes unnoticed until it becomes too big to ignore. Now, go back to the paradox that bothers people so much. Why are stocks also going up? Because the short term is still comfortable. Because the narrative still works. Because as long as the system holds, companies keep making money, technology keeps advancing, and money keeps and no one wants to be the idiot who got out too early. But there's a brutal difference between those who can afford to be wrong and those who can't. The average investor can miss time and recover. A central bank can't. That's why you see this mismatch. On one side, people betting everything will keep working. On the other, people preparing in case it doesn't. It's not a war between optimists and pessimists. It's a difference in responsibility. Those with little to lose seek returns. Those with everything to lose seek resilience. And that word is the key to everything. Resilience, it's not about making more money. It's about not breaking. It's not about predicting the future correctly. It's about surviving multiple possible futures. And when you start looking at the world through that lens, gold's behavior stops being strange and becomes obvious. Now let me bring this down to your level, because if this stays macro only, it doesn't help at all. Most people live financially overexposed to a single scenario, a single paycheck, a single system, a single flow. If everything continues as it is, great. But if something changes, life becomes chaos. And the where doesn't come only from lack of money. It comes from the feeling of fragility, of always depending on factors you don't control. What the big players are doing is trying to reduce that fragility, not eliminate it. That's impossible. But reduce it, create layers of protection. Have something that works even when everything else freezes. And that applies to countries, companies, and regular people. The difference is that regular people almost never stop to think about this clearly. They just feel the exhaustion, the anxiety, the fear of making one more mistake. And maybe the most important part of all this is understanding that this movement won't clearly appear in the news. There won't be a day when someone announces the system has changed. You'll only realize it after it already has. It's always been that way. Big transitions happen too slowly to cause panic and too fast to be ignored once they become obvious. Gold isn't the cause of anything. It's the thermometer. It rises when trust stops being automatic. When people start thinking twice before believing. When the world enters that strange state of everything's fine, but what if it isn't? And that collective mental state is far more powerful than any single economic indicator. At the core, what's happening with gold is the same thing that happens to someone who starts organizing their financial life after a scare. Nothing has collapsed yet, but they understood that living on the edge is dangerous, and they decided to change before the crisis, not after. It's a silent decision, not glamorous, but extremely rational. There's a point where insecurity stops being a one-off event and becomes a permanent state. You're not broke today, but you don't feel safe tomorrow either. You pay your bills, but any unexpected event feels too big. You even make money, but never feel like it stays. And that quietly erodes the mind. It's not despair, it's exhaustion. A constant exhaustion of someone always in survival mode. That's exactly what large institutions are trying to avoid. They're not reacting to a current crisis. They're reacting to the possibility of living in that state for decades. Because living permanently exposed to a single system, a single promise, a single structure requires a level of trust that is no longer as solid as it once was. And here's something very important. Almost no one talks about when it comes to money. The main function of money isn't to buy things. It's to buy mental peace. When you don't have that peace, every decision gets worse. You accept bad jobs. You tolerate unfair situations. You postpone important decisions. You live afraid to move because any mistake can cost too much. What central banks are doing by buying gold isn't very different from what a person does when they start building a minimal reserve after a financial scare. At first, that reserve doesn't bring peace. On the contrary, it brings more anxiety because now there's something to lose. Every expense hurts. Every unexpected event scares you. And many people quit at this stage thinking it doesn't work. But those who get past it realize something fundamental. There's a value at which the brain changes behavior. The mind leaves survival mode and enters planning mode. That applies to people, it applies to countries, it applies to entire systems. While you're always at the limit, you only react. When you create margin, you choose. And choosing changes everything. The big players are looking for exactly that margin. Not to shine, not to show off, but to avoid being cornered if the rules change. Now think about how much this connects with the real life of people who work hard, put in effort, and feel like they never move forward. It's not a lack of intelligence. It's not a lack of effort. It's a lack of margin. Without margin, any plan becomes a risk. Any change becomes a threat. Any mistake becomes a catastrophe. That's why the narrative of just invest better doesn't work for most people. Because investing requires calm. It requires time. It requires clarity. And clarity only exists when fear decreases. What comes before investing isn't returns. It's the feeling that you won't break if something goes out of control. Gold, in this context, isn't about getting rich. It's about reducing dependence. Reducing dependence on a single government, a single currency, a single promise. And that's a huge lesson for anyone who looks only at price and not at the reason. Another point almost no one notices is that these movements aren't rushed. No one is running to buy everything right now because running signals fear, and fear creates chain reactions. What's happening is a slow, constant, methodical adjustment, exactly like someone who decides to get their financial life in order without telling anyone, without posting about it, without speeches. They just change habits, month after month, until one day they realize they're no longer suffocating. And that's the most powerful kind of transformation there is, the one that happens in silence. Meanwhile, the average investor is bombarded by extremes. Either everything will collapse or everything will be fine. Either you get in now or you'll be left behind. This kind of discourse keeps people emotionally trapped, always reactive, always afraid of missing something. And people who live like that never build a foundation. They just chase. The big players don't chase. They position themselves. They don't try to predict the future perfectly. They build structures that work even if they're wrong. And that's the brutal difference between those who survive change and those who get run over by it. Maybe the biggest mental trap is thinking that stability means nothing will change. Real stability means being able to go through change without breaking. And the world is entering a period where changes will happen not explosively, but continuously. High debt, political tensions, systems being used as pressure tools. None of this is new in isolation. What's new is everything happening together. And when everything happens together, blindly trusting a single path stops being prudent. Now, if you're listening to this and thinking, okay, but what do I do with this information? Calm down. The answer isn't to run out and buy gold or change everything overnight. The answer starts with something much simpler and much harder. Understanding that financial security doesn't come from picking the best investment. It comes from reducing fragility. Reducing fragility means creating margin, not depending on a single flow, not always living at the limit, building systems that work even when you're tired, distracted, or emotionally shaken. Trading willpower for structure, gold, at the macro level, is that a protective structure. In personal life, this logic translates into other things. A minimal reserve, basic organization, less emotional decision-making, fewer miracle bets, more boring consistency. And maybe that's the hardest part to accept. What builds security isn't exciting. It doesn't make headlines. It doesn't create buzz, but it completely changes how you live. There's a specific moment when confusion turns into clarity, not because the world got simpler, but because you finally understand your role in it. And that clarity doesn't come when you learn a new investment. It comes when you realize the problem was never a lack of intelligence or effort. It was living too long inside a system that demands constant trust without offering room for error. When you understand that something shifts inside, you stop blaming yourself so much. You stop feeling behind. You stop believing everyone else knows something you don't. And you start seeing that the game has always been harsher for those who live without emotional and financial protection. The big players in the world understood this early. They know you can't rely on eternal promises. that systems work until they don't. That stability is temporary by definition. And so they build layers, parallel plans, alternative routes, not because they believe in the worst, but because they know relying on a single scenario is dangerous. Most people never had that luxury. They always lived improvising, solving everything short term, plugging one hole with another hole, and that creates a mindset of permanent urgency. Everything needs to be solved now. Every decision feels too heavy. Every choice seems final. And when the mind lives like that, it can't build anything long term. That's why so many people feel like they work, put in effort, and still don't move forward. It's not because money doesn't come in. It's because it comes into an environment of chaos, an environment without structure, without a cushion, without room for error. What's happening with gold in the world is a mirror of that on a global scale. The global financial system still works, but it has lost the benefit of automatic trust. Before, no one questioned it. Today, everyone questions it in silence. And when doubt enters, priorities change. It's no longer about maximizing gains. It's about minimizing future regret. Now, let me tell you something that might be the most important part of this entire script. Financial security isn't feeling like you're winning. It's feeling like you won't lose everything if something goes out of control. That feeling completely changes how you live. It changes how you negotiate salary, how you deal with bad jobs, how you react to problems, how you sleep. When you don't have that security, everything feels like a threat. When you do, problems become logistics. And that difference is massive. Central banks don't buy gold because they think the world will end. They buy it because they want to turn potential crises into manageable problems. They want chimie. They want choice. They want to avoid being forced to act at the worst possible moment. And that's exactly what's missing in most people's financial lives. Time and choice. Without time, you take whatever shows up. Without choice, you swallow bad decisions. Without margin, you live in fear. And living in fear is extremely expensive. It costs opportunities. It costs mental health. It costs dignity. The good news is that this logic isn't exclusive to rich countries or massive institutions. It works at any scale. It doesn't matter if you make a lot or a little. What matters is whether you build margin or not, whether you organize or not, whether you rely on luck or structure. And here's the belief breaker many people need to hear. You don't need to understand everything about global economics to improve your financial life. You just need to understand one thing. You can't live well in a system that demands total trust when you have no reserve to make mistakes. When you understand that, you stop chasing miracle shortcuts. You stop jumping from strategy to strategy. You stop comparing yourself to people who seem to always be winning. And you start doing something much less glamorous, but much more powerful. Building a foundation. Foundation doesn't show. Foundation doesn't go viral. Foundation doesn't impress. But foundation holds. And that's exactly what the big players are doing right now. Reinforcing the foundation while the rest of the world debates narrative. They're not trying to predict the end of anything. They're just refusing to be caught unprepared. Maybe the biggest mistake for someone starting to organize their financial life is thinking they need to be right about the future. You don't. No one is. What you need is to be prepared for several possible futures. And that starts with simple things. Margin, organization, less fragility. When you do that, something curious happens. Money stops being a constant emotional problem. It doesn't become happiness, but it becomes a tool. And when money becomes a tool, you become the agent of your own life again, not a hostage. And maybe that's why gold is so uncomfortable right now, because it's reminding the world of something everyone prefers to forget. Systems change. Trust fluctuates. And those who don't prepare pay more later. Getting this far already says a lot about you, because those who stay until the end aren't looking for a quick answer or a miracle promise. They're looking to understand, and understanding is the first step out of survival mode. If you pay attention, everything we talked about here isn't really about gold, the dollar, markets, or distant countries. It's about security, about living without that constant feeling that any mistake can throw you years back, about stopping walking on a razor's edge. The world is going through a slow transition. It's not a collapse. It's not a financial apocalypse. It's something much more subtle, and because of that, more dangerous for those who don't notice it. The old rules still work, but they no longer inspire the same blind trust. And when trust changes, behavior changes with it. The big players are protecting themselves because they can, because they understand you can't rely on a single scenario. And the average person, even without billions, needs to learn exactly the same lesson. Not at the same level, not with the same instruments, but with the same logic. The biggest mistake you can make now is thinking this has nothing to do with you. Because the ones who suffer most during transitions are exactly those who live without margin, without reserves, without structure, those who need everything to go right all the time just to not collapse. And maybe you recognize that feeling, working hard, paying bills, doing your best, but never feeling truly safe. Always one unexpected event away from chaos. Always a silent fear hovering. Always postponing decisions because it's not the right time. That's not a lack of ambition. It's excess fragility. The transformation this video proposes isn't becoming an economics expert or running out to buy trendy assets. It's changing how you see the role of money in your life. Money isn't a prize. It's not status. It's not validation. Money is room to maneuver. When you build margin, your life changes on the inside before it changes on the outside. You sleep better. You negotiate better. You think better. You make fewer mistakes. Not because you got smarter, but because you stopped deciding under pressure. That's why building a financial reserve hurts at first, because it exposes how long you've lived at the limit. But after a certain point, it becomes a turning point. Not because of the amount, but because of the mental effect. The brain relaxes, vision widens. The future stops being a constant threat. And that's exactly what the big players are buying right now. Not gold, strategic peace of mind, time, choice. You don't need to copy their moves, but you can learn from the logic, reduce dependence, create simple systems, organize your life in a way that doesn't collapse at the first hit. It's not exciting. It doesn't make for a good story, but it works. While many people will keep arguing narrative, trying to predict the next event, chasing shortcuts and bets, those who understand structure will keep moving forward slowly, quietly, but with much more security. The world won't end tomorrow. But it also won't go back to being as simple as it once was. And living well in this scenario requires less hurry and more foundation. If you understood this, you're already ahead of most people. Now, before you go, I ask you something simple, but very important for this channel to keep growing and reach more people who are going through the same silent anxiety. Leave a like on this video, subscribe to the channel so you don't miss the next content. And most importantly, comment the word asterisk, asterisk, margin, asterisk, asterisk below. If you made it all the way here, comment asterisk, asterisk, margin, asterisk, asterisk, so I know you watched until the end. See you in the next video.